Hi traders, hi. Let's take a look at two trades that I took today. Specifically, I want us to look at Apple because Apple demonstrates every single technique that we spent time covering this past Saturday, okay? So let's go to the charts here. As you can see, this is the chart of Apple. Okay, it is a 2-minute chart of Apple, which means that every single individual bar that you see represents 2 minutes of trading. Okay. Now, we discussed on Saturday, right? We discussed on Saturday that these two moving averages are very important. The 200 period moving average, that's the 200, and the 20 period moving average. The blue is the 20 period moving average. Now, these moving averages are automatically superimposed on your trading platform charts. Now, we also discussed that if the stock at the open of the trading day opens under the first bar of the day, opens under these two key moving averages, the general assumption is that the stock is going to drop. Does it always drop? No, but the general assumption is that it will drop. But we're supposed to wait to see what the first bar reveals. Now, we also discussed on Saturday that if the first 2-minute bar, which opens under the two key moving averages, is a negative bar, then we have a match, which means that we are in a negative position, which is under the two moving averages, and we have a negative bar under the two moving averages. This represents a match. If the first bar is green under the two moving averages, then we have a mismatch, right? We have a negative location, but a positive bar. But in the case of Apple this morning, we had a match. The first bar of the day is red, negative. This is what we call a topping tail bar. So we said that when the first bar under the two moving averages is a match, a negative bar, then our actions are simple. To actually dive into the account with approximately half of your account, half of the account that is available to you, you dive in. Boom! The instant the following bar or any subsequent bar violates the low of your match bar. Okay? So boom, or if I were to draw this a different way, I would say you enter here. Now we're betting on the downside. In the stock market, you have the ability to bet on the upside when you think it's going to go up, or you can bet on the downside when you think it's going down. In this case, we think it's going down because we have a negative location under the two key moving averages, and we have a negative bar under the two key moving averages. What is called in the industry, we short or enter short with half of our account here. Now, the reason why we don't want to put all of our account into this specific entry is because we want our protection to be above the high of the first bar, so that if we lose, we're only going to lose one bar. But if we win, we will win many bars. So the key to playing the market successfully is to always keep your losses small compared to your wins. Your wins should be much bigger than your losing trades. So our protection, let's do this again. We are entering below the low, boom, with half of our available funds. Our protection goes above the high of bar number 1. Okay? Now, with the remaining half, we actually want the opportunity to add if the play starts moving in our desired direction. And if you recall, what I taught you on Saturday was to add, when we are betting on the downside, we add every single time a red bar snatches away a green bar. You remember that? When red snatches away a green bar, we add. So here we have red snatching away a green bar. Boom! We add. Here we have red snatching away this green bar. Boom! We add. Here we have red snatching away this green bar. Boom! We add. And watch this. Let's look at this. Oh my God. Look at the size of this winning trade. So let's cover it once again. We enter under the first bar's low because we have a negative bar in a negative location. I taught you this. Our protection is above the high of the first bar. So that if we lose, we only lose one bar, but if we win many bars. Okay? We add to our position when red takes away green. So we add here, red takes away this green. Red takes away this green. Add. Red takes away this green. We add again. Red takes away this green. We add again. Red takes away this green. We add again. And this entire move produced for me $8,421. $8,421 over how much time? 90 minutes. 90 minutes, that's 1 hour and 30 minutes, produced $8,400. Now, for your account, which is going to start off smaller, maybe this would be $840. With a very small account, maybe it's $84. Don't get too hung up on the decimal points, all right? As you grow in your trading, the funding from me grows. And so you will grow the ability to go from $84 to $840 to $8,400. But these are the very same concepts, the very same tactics that we covered in detail this Saturday, this past Saturday. Nothing new. Many of you will remember these strategies in detail. And this is just one of the many things that I want to train you and teach you on. This is just one approach. All right. So if you will allow me to train you every single day of your lives, you're going to get there. All right. Let's take this journey together.